The old saying, money always leaves a trail, is pretty much true. Somewhere down the line of a transaction, someone will either put the money into a bank account, take a tax deduction, or purchase an item in cash, which will be reported on someone else's tax return as either income or a tax deduction. So, how does the IRS catch cheaters? The IRS is using algorithms and data analysis to catch tax cheaters. That's right, they've gone high tech. Data analysis includes matching all of your income information with the income reported on your tax return, meaning they match information from banks, employers, investment transactions, 1099 interest, 1099 dividend, 1099 miscellaneous, and every other type of income, including foreign earned income, whistleblower data, and other sources of information, including social media. They match the data with your social security number or your identifying numbers with the income that is reported on your tax return. Now, most of this, well, pretty much all of this is done by the IRS computer. And when the IRS computer finds a mismatch, meaning they find income but they don't find it on your tax return, they notify an IRS human. Another example of how you can get caught is, let's just say a lending institution submits a mortgage interest payment of $30,000 on your mortgage 1099 interest. Well, that's a pretty expensive home. But you only reported $38,000 of income and $7,000 for real estate taxes. Let me see. This would create a red flag, and more than likely, the IRS would ask questions in the form of a tax audit. The IRS requires you to keep records for 3 years from the date the tax return was filed. The IRS conducts audits either by mail or through an in-person interview, and they will let you know what type of audit it will be. They will also let you know what records that you will need to provide. If the IRS finds a continuous error, meaning an error that it looks like you have made over and over, they may extend the audit to include more years, but usually won't go back more than 6 years. The best way and the only way to win an IRS audit is to keep good records and to be sure, to be very sure, your records correspond with what's on your tax return.